Hello, folks. This is David Demars from Demars Financial with an educational update for the month of April 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in March. I will also provide insight into what those developments could mean for you as an investor. Please stay tuned at the end of the video for a required disclosure announcement. The first quarter of 2019 is behind us, and major domestic indices have posted a strong performance for the year so far. Between January and March, the S&P 500 gained 13.1%. That's its best first quarter since 1998. The Dow Industrial Average and NASDAQ Composite also posted double-digit increases during that same time. While all three industries were up during the month of March, their monthly gains were relatively small. The S&P 500 added 1.8%, the Dow hung on to about 0.1%, and the NASDAQ was up 2.6%. Questions about the strength of both global and domestic growth continued to market performance during the month. Domestically, we had plenty to consider. The final reading of economic growth in 2018's first quarter lowered to 2.2%. This downward revision, real gross domestic product was up 2.9% in 2018. However, the fourth quarter's slow pace reflected concerns that momentum from the 2017 corporate tax cuts may be starting to wane. We saw these worries play out as the Treasury yield fell and the yield curve inverted. What this development means is that the yield on the short-term Treasury bills and notes exceeded that of the 10-year Treasury bond. This type of inversion hasn't happened since 2007. Some investors believe that this occurrence could mean that an economic slowdown may be on the horizon. During its March meeting, the Federal Reserve confirmed that economic activity growth has slowed. The Fed chose not to raise rates and removed any rate increase projections for 2019. Chairman Jerome Powell also reinforced that both economic fundamentals and the labor market remain strong. On the international front, the European Central Bank, ECB, cut its estimate for 2019 economic growth to 1.1% and announced a new stimulus program. These updates contributed to market uncertainty, especially as both Canada and Australia also appear to have a slowing economy. Wall Street reacted to this news by posting several days of losses. In addition, the ongoing question of what will happen with Brexit continues to play out in the background throughout the month. Although markets may be experiencing uncertainty regarding both global and domestic growth, all news wasn't negative in March. In the US, the latest data showed modest gains in personal income, new home sales, and consumer sentiment. Apparent progress in the trade talks with China also led US markets to end the month on a high note. As you can see, a lot of moving parts and key perspectives are affecting investors right now. We will continue to monitor these developments in April and try to determine what may lie ahead for economic growth both in the US and abroad. That's it for this month's economic update. Once again, this is David Demars with Demars Financial signing off for the month of April 2019. Please remember that anything we talk about or discuss here is not a recommendation. If you would like to discuss your personal financial situation, please give us a call at 509-536-9556. We'd be happy to talk to you. This is a required disclosure announcement as well. While we believe this information to be accurate in this report and reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results, and thank you again for listening.